Ladies and gentlemen, welcome back to the channel. Donald Trump is shaking things up again, announcing today a 30% tariff on Mexico and the EU starting on August 1st. Some of these countries are responding, and I have all of the details you need to know if it will move this market coming on Monday. And some of the biggest events coming this week, including CPI, the first CPI report that is expected to show inflation from tariffs. At least that's what many Fed officials have said. I think there's a lot on the line for Tuesday's CPI report. We have retail sales, a bunch of other data coming out, and the start of earnings season. I will share with you in this video all of your breaking news you need to know. What could happen in this upcoming week with your data coming out as well as earnings. And finally, why inflation or tariffs will not cause inflation. The only outcome from tariffs, in my view, is it could cause weakening economic growth, which is also not great for stocks, and we'll discuss that here in this video. But first things first, hit that like button and subscribe to the channel. If you guys have not done so already, check out the link down below for the trading community. That is the most unique service imaginable, because what we are doing is going out, finding the small cap stocks that are underlooked and underappreciated in AI and biopharmas and investing in those, okay? We're trying to exclude the bad ones, invest in the good ones. And we're having some incredible results already. I invested in Nebius at $17. It's like $49 today. I invested in Applied Digital at $3. It went up to $15. Okay, I invested in HIMS at 22, obviously went it up to like 60 something. Novartis Semiconductors, invested in that at $2. It went up to $7, $8. I invested in IONQ at $7. That stock is in the 40s, okay? We tend to identify opportunities before Wall Street catches on to them. And that is the idea that we are pursuing within that group. These are medium-term trades. They're 6, 12, 18, 24-month time horizons on average, with some of them that could turn into longer-term investments. So check it out if you have not done so already, and let's get started. And here is a weird headline from the Financial Times. It says the U.S. urges Japan and Australia to clarify the role on U.S.-China war over Taiwan. The Pentagon is urging Japan and Australia to clarify what role they would play if the U.S. and China went to war over Taiwan, the Financial Times reported on Saturday. Iran is carefully assessing options for talks with the U.S. And here's the big news today. Trump says there's a 30% tariff on EU goods. Trump says the U.S. will impose a 30% tariff on EU and Mexico from August 1st. Trump, in a letter to Sheinbaum, says, which is the Mexican president, quote, if for any reason you decide to raise your tariffs, then whatever the number you choose to raise them by will be added onto the 30% that we charge. It says the European Commission takes note of letter by Trump on tariffs. The European Commission is ready to continue working to pact by August 1st. The European Commission to take necessary steps for EU interests. The EU Commission says that these steps include countermeasures if required. Trump's threat of 30% tariffs on EU goods from August 1st is a negotiations tactic, says three EU officials. The Prime Minister says U.S. tariff announcement is, quote, concerning. The Mexico Economy Ministry says that Mexico is negotiating. Now, again, this is a negotiations tactic, okay? The art of the deal: create chaos, create uncertainty, create confusion, create an urgency to get things done, okay? That's one reason I'm so bullish on AI right now, is because there is so much competition. With who? Well, there's competition between companies, sure, but there's competition between countries, okay? The Cold War between Russia and the US was one of the best things that ever happened to innovation in this country, okay? Because it forces you to innovate at rapid speeds, no matter if it's technology, military, at the time in the Cold War, space technology as well. Well, we have a Cold War with China, with AI, and it's gonna force innovation. Innovation is typically good for the stock market and typically good for your investments as long as you don't fall too far behind, okay? And as long as you win the inevitable Cold War, which I believe the US will. Okay, so I think when it comes to negotiations, it's really just or some of these threats, some of these letters, some of them are just going to go into effect, like the smaller countries that don't matter to markets. Okay, I don't know if that's a negotiations tactic. That could be just, here's what you have to pay, blah blah blah. But when it comes to the EU and Mexico, it's really just another kind of kick in the ass to get moving on negotiations, to get negotiating, okay? Whereas maybe Mexico and Europe were taking their sweet time. Now it's like, hey, we really got to sit down and pencil out a deal. That's what this is, more than it is like 30% tariffs are actually going to go into effect. I don't believe Trump wants to wreck the economy. I don't think that is Trump's playbook. Trump has now recently started to tote that the stock market's at all-time highs. And according to, Trump cabinet officials, they want to keep the stock market at all-time highs. Like, they don't want to wreck the markets. But they also don't want trade negotiations to take 2 years. And one way to speed things up is to put a deadline and to threaten that deadline. And I think Trump does have a little bit more credibility when it comes to these deadlines than he did at first, because there was actually, 145% tariffs on China, right? That actually held for a couple of weeks. Trump is willing to take it to the wire when it comes to the economy and when it comes to trade and really relationships with other countries. So, again, I think we're going to hear more on this, but I think it's really just to get a better deal done by August 1st. Germany's BGA says global trade has been in chaos since Trump's first tariff announcements in April. He says that U.S. trade war against the rest of the world has led to disrupted supply chains and collapsing demand and uncertainty. Germany's BGA says full consequences of erratic U.S. policy are yet to come. It says that a trade agreement with the U.S. would be important. And Germany's BGA says, but Europe must become less dependent on U.S. market in the long term. Donald Trump, yet again over this weekend, says, quote, we have a moron at the head of the Fed. He's a moron, in quotes. Amazon says Prime Day 2025 was the biggest Prime Day event ever. France's President Macron says, quote, very strong disapproval of U.S. tariff announcement. Macron supports U.S. Commission in negotiations. And Macron calls for speeding up preparation of countermeasures. Starting off next week on Monday, you're going to get some data out of China, like their GDP growth rate, industrial production. That doesn't move our markets. We will get a 3-month and 6-month bond auction as well. Tuesday is the big day. Okay, Tuesday, you're going to get core CPI month over month. You're expecting 0.3%. Here's the deal. A lot of Fed speakers have come out recently and said that they expect some of the tariff inflation to show up in this Tuesday's CPI report. If it shows up, then it's one of those things where, hey, most people expect prices to go up at least once. So if inflation does show up, it doesn't validate the Fed that we have an inflation problem, but it does validate that, from the Fed's perspective, not from my opinion, but from the Fed's perspective, that they should wait and see what happens. Okay? I don't believe tariffs cause inflation at all. I think they're actually deflationary. And I'll discuss that briefly as well here in just a moment. But if we don't have inflation, it really validates that we're still not seeing inflation from tariffs, and we may not see inflation from tariffs. And it puts a lot more pressure on the Fed to actually start the process of cutting rates. But whether you're looking at core month over month, year over year, and headline month over month, or headline year over year, you're expecting the numbers to jump sharply this Tuesday. I think, again, with high expectations, the odds are that we do come in low. Even if we do see some inflation, we're probably going to come in lower. Like, core is expected at 0.3%. If we come in at 0.2%, that's great. That's going to be seen as better than expected. Now, following the CPI report, we get Fed speeches from Fed Bowman, Fed Barr, Fed Collins, and Fed Logan that same day after the CPI report comes out. So keep that in mind. On Wednesday, we get PPI, expecting that to rise as well from 0.1% last month to 0.2%. Industrial production, Fed Barr speaks, and Fed Hammock speaks as well. We get the Fed Beige Book, which is actually interesting because it gives us a breakdown of economic activity in different Fed regions. New York Fed, Atlanta Fed, Boston Fed, Chicago Fed, San Francisco Fed regions, all over the U.S. essentially. Fed Williams will speak as well on Wednesday. On Thursday, we get retail sales month over month, arguably, very important to see how the economy is doing. Bunch of Fed speakers as well, bunch of Fed bond auctions. And then on Friday, we will get the Michigan Consumer Sentiment Survey for July. Inflation expectations tend to be, top of mind for Wall Street these days. Building permits and housing starts. So we do have a jam-packed week this week as far as economic data. Also this week, it is the start of really earnings season. On Monday, you don't have much as far as notable names. On Tuesday, JP Morgan, Citi, Wells Fargo, BlackRock, State Street, BNY, and Albertsons, as well as Ericsson. Tuesday, JB Hunt and Pinnacle. Wednesday in pre-market, ASML, Bank of America, Goldman Sachs, Progressive, Johnson & Johnson, Morgan Stanley, PNC. Wednesday in after hours, United, Alcoa, Kinder Morgan, some other names. Thursday pre-market, really the big day. TSMC, PepsiCo, Cintas, US Bank Corp, Abbott, and Novartis. Thursday and after hours, Netflix, Interactive Brokers, Bank of Ozark, First National Bank. And then Friday, you have Huntington, 3M, Regions, Truist, SLB, American Express, Charles Schwab, Ally, and Comerica. I've really talked about for a while now. I think we're kind of due for a little bit of a consolidation phase. I think we're already in the process of that. We are trending upwards still. We went through about a 1% pullback or so in the last week, and then we went back to new all-time highs. We're probably going to come down for a little bit, trade sideways here and there. But by no means am I expecting like a full-blown correction. I think, again, odds are inflation comes in better than expected this week. I think earnings are going to come in better than generally expected as well. And there's going to be a lot of optimism and a lot of euphoria around AI. I think the markets are moving in the right direction. And let me just share with you a post that I made on X. If you don't follow me on X, go ahead and go follow me on X. I say that tariffs do not cause inflation. Here's why. Inflation is always a monetary phenomenon. Inflation is caused by excess money printing every single time. Supply issues or external events can amplify inflation, but persistent inflation is only a monetary phenomenon. Tariffs are a tax. Tariffs do not create money. They transfer money from corporations to the government. The argument the Fed is making is as followed, in simpler terms. Companies are going to raise prices. Consumers are going to request pay raises to compensate for higher prices. Then companies raise prices again, aka a wage price spiral. Here's where the Fed is misguided. The consumer is weak. Essentially, the consumer has been in a recession for a couple of years now. Companies can only raise prices if consumers pay higher prices. But in a capitalistic economy, there will always be competition. Besides for specific products, like NVIDIA can charge whatever price they want because they are the only viable option for AI hyperscalers. Companies will always undercut the competition. Companies that do not raise prices will gain market share from those that do raise prices. Thus, if a company is forced to choose between raising prices and losing market share, they effectively cannot raise prices. What tariffs will do? Tariffs will hurt company margins. Companies will have to be more efficient. One big use case for AI, and another is laying people off. I say, good, now we are on the same page. And I did a poll that asks, could you go to your employer today and ask for a raise because of tariffs? 2% said yes. 69.4% said no. 10.2% said maybe. And 18.4% of you guys said, I'd get fired. Okay? That's the argument. There is going to be no wage price spiral because of tariffs. It directly just hurts the economy. But unfortunately, it's going to take some time for that data to show up in the hard data, right? For it to actually show that the economy is weakening because of tariffs and that we don't have inflation. It's going to take some time. And the Fed, hopefully they're not too late. That's the biggest risk to this market, is too much damage is done. The labor market does weaken. Even though I don't think we'll see a recession, the risk is that growth slows too much and, Wall Street starts to extrapolate that we could go into I Essentially, we get a growth scare. That's the risk to this market. It's not that inflation skyrockets. And I hope by now we're all on the same page with that, because it's simple, really Econ 101 basics here. Inflation is always a phenomena of, printing money and a loose Fed. Always is. Look at the 70s inflation. There was, price controls that tried to be set that distorted markets, that created supply issues, but it was really the Fed that had easy monetary policy, that the government spending too much money. Okay. It wasn't tariffs. It wasn't, that from that perspective. It was a monetary phenomena in the 70s. It was money printing back in Rome. It was money printing in Korea, 100 years ago. Inflation is only ever a money printing issue. That's it. Okay. And there can be no wage price spiral if people cannot get wage hikes from their employers. And I don't think consumers are willing to accept higher prices, and I don't think companies are willing to pay higher prices for labor. They'll say, okay, we can do without you. Again, unlike even the 70s, when a lot of the economy was manufacturing, today there's probably a lot of excess job positions that we don't need, that companies don't need. There's software that can do a lot of jobs today. And that's the threat, and that's the problem. If there were to be like a broader tariff issued. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check out the link down below in the description of this video for the trading community. Have a great rest of your day, and I will see you in the next one.